Hello, everybody. Welcome back to Crypto Talks. My name is Phil. This is Rob, and yeah, we're back from our vacation, I guess.
Yeah,
Took some time off during the holidays and decided, you know what, today's kind of a nice day to start getting back into this, right?
that's right.
Yesterday we had a huge day with the announcement of the ETFs being approved, and today they're trading, and a
Simple
lot
as
of
that.
people, yeah, a lot of
I
people
mean,
expected something different than what we've seen so far. And we thought, why not just sit down, talk about it, see what we can, we can figure out.
yeah.
So, but yes, so we're back. Yay.
That's it.
Hope you liked our new intro, by the way.
I do.
Yeah, me too. I do. But yeah, so let's just kind of, this is supposed to be like just a hangout thing. We haven't planned this at all. We kind of just said, you know what, let's just stream today because reasons. And
Yeah, we are. Yeah, there's a lot to talk about.
Oh yeah.
Well, yeah. So it's kind of interesting. What did people really expect from the from the price movement? And I think it's what's quite clear that from day one is the market priced it in.
Yeah.
There is no, we pumped up. We hit, what was it, 40? What do we hit at the peak?
49. I think on KuCoin it was 49,990, and I think Binance was
49ish. So
48,990. Sorry.
Yeah, so around 49, and then it was immediately basically shot down within a couple of hours. I set off on a plane with looking at some very healthy profits and came back and going, oh, they've all gone. Great. So that was a bit annoying. Not much I could do about it, but oh well. And it's kind of, this was kind of the warning of that. We were mentioned at previous points throughout this, is that the ETF is made by the rumor sell the news event, because look at all these ETF, they're all live. They've all gone live on the same day. This is not an accident. This has been planned. Every single one of these funds has already been preceded with the Bitcoin that's needed to trade with them. So, like, this whole thing of, oh my God, there's going to be billions worth of buy pressure. Well, maybe they spent the last year buying, and that's why Bitcoin isn't at 15,000 anymore. It's at 45,000, 46,000. Perhaps maybe that they've been sitting there accumulating for the entire year, and that's why it looks like we've been stepping up. You move up a range that institutions will box the price in. They will trade it the way that they know best in order to accumulate. Then when they see the volume exhaustion, they see that there's no sellers at the price range, they will. Yeah, they'll let the price go up to the next stage, and that's why we're so big on talking about trading ranges, because this is what they do. This is how people accumulate. The reasons why these big patterns sort of work is because people do, people use them. So it's and big players use them, and they have techniques and methods for extracting as much value as they can, and that's what they're doing.
Yeah. No, I remember, I was on a crypto watch or Twitter watch rather yesterday, looking for, the approval to come through. We had that mess up by the SEC, which I think we need to talk about because it's, to me, it's just funny.
Yeah.
But
it's a worthy thing to talk about as well because of the implications of that exact tweet.
I mean, the funny part is, the funniest thing I've seen so far is that in October, Gary Gensler tweeted, "Oh, keep your mind on, cybersecurity, and make sure you have 2FA and all that kind of stuff" in a tweet. And then, turns out the SEC themselves don't even have 2FA on their on their X account.
There is an account which was compromised, and it's simply not good enough. It's
embarrassing. Like, I made a tweet or a post on X. I'm always going to say tweet. I don't care what people think about that. I'm going to say a tweet. So I tweeted that, I found it kind of to be almost unreal how crap, how crappy that is. That they pretend to, they claim to protect investors and everything, and they can't even protect their own, Twitter account.
Yeah.
It's awkward. It's super awkward.
It's a bit cringe to be honest. It's
It's like, we're boomers, just so you know. Just if you were doubting that, here you go.
It really is. If ever there was evidence that these people do not understand how modern economies and how modern value transactions take place, and forget crypto. How many stocks have you bought? How many stocks has anyone our age really bought? There are very few hardened stock investors around our age. I know a lot more people who are interested in crypto, and so that alone is a market trend which should have been picked up on and should have been worked with to constructively build regulation and to actually make the rules clear, rather than essentially making innovation a lot riskier to go by, because you don't have a clear set of rules to follow. I know, being here in the UK, Rishi Sunak, the Prime Minister, made this claim that he wanted to make the UK a crypto hub. That was the term to use. It was going to be a global crypto hub, and we announced our regulations, and a lot of it, I'm sure, is pretty reasonable and pretty fair, but some, for whatever reason, a number of companies have since said, we're out, we're done with the UK market, we're not going to trade with. They've just literally quit. So is that making a crypto hub? And the US is similarly, it's so behind the curve in terms of its regulation and where it's actually, what are the rules and what can you trade. There is so much which is restricted in the US, not because it's necessarily bad, but simply because the people have said, no, we've got no jurisdiction to trade here, and it's just not good. It's not a way to it's not a way to
prove it. It's been known for a long time, and the whole crypto space has always known that the United States have not even tried to clarify anything for innovators and for investors in the States, other than just referring back to the Howey test and all that. And it's just like, when the MiCA thing came out in Europe, that clarified a lot of things for a lot of people in Europe. The United States needs something like that. So there is at least something to go off of. And clearly, the crypto asset class is a completely different asset class than stocks and securities and all these things. To me, at least. Maybe I'm just being wrong here, but it needs its own framework, and so there's that. But yeah, either way. So let's quickly just have a look at the charts, I guess, because what's happened so far since the approval and since they started trading the ETFs. So here's Bitcoin, and this is on the, let's go for daily. There we go. So some stuff has happened up here. You can barely see it, but if we go in a bit further here, okay. So yesterday we had a very volatile day, and the day before that too. Actually, we have had a lot of wickiness up and down, and today is the same thing. I mean, we had this big pump right after we started trading the ETFs, and one of the things that I thought about that it might be is that usually when something lists, prices shoot up really fast because there's no liquidity, whatever, and then they have to be arbitraged back into where they were supposed to be. And generally speaking, when something is listed, for example, let's take any coin on KuCoin or something, you get that huge first candle thing, and then you get that weird kind of downwards moving trend until it finds where it's supposed to be, fair value, etc. And that might be what we're seeing here. We saw that initial pump, which was not as big as a lot of people would expect. I mean, yes, we went from 46 to 49, which is a pretty significant move for Bitcoin, but it's nothing like out of the ordinary, right?
Yeah.
And since then, it's just been, if I go to the 15-minute, which I usually don't do at all, come on, there you go. I mean, here is where we got the ETF listing, had a pump, and then since then it's just fallen down way below from where it started, and now it's kind of just sideways and slightly up. It's no different to any type of, it's not abnormal, in Bitcoin.
It's just very spiky and volatile, and yeah, this is uncertainty. This is a clear battle between people who are, as soon as the ETF is announced, there will be people who will sell the news. They will think, oh, it's a top, it's going to dump after this. The institutions are going to manipulate it down so they can fill their bags. Maybe that's true, maybe it's not, but it's what is obvious is that if people buy spot Bitcoin, it doesn't really matter what the ETFs do. The ETFs are kind of, in a sense, they're a fixed pool of liquidity. Each one has been seeded with so much Bitcoin, and if they at some point, yes, if there's a huge amount of demand, they will go to the spot market and they will purchase Bitcoin and add it to the fund, exactly the same as Grayscale did. We've already seen this play. We know how it goes, how it takes place. So yes, long term, super bullish. It's great because especially as these ETFs become available in everyday normies people's portfolio. If Bitcoin became available for me to just add directly and invest in directly as my pension, I'm going to do that. So
same.
Yeah, and so that provides a continuous passive inflow into what is a very, very small asset in global standards. So yeah, if what we could expect to see from that basis is more kind of S&P like behavior, where it just sort of plods up every month, because there's going to be this continuous underlying demand.
Buy pressure is going to be there all the time.
Yeah. However, Bitcoin also has a supply issue. It has very illiquid supply at times, and so that is going to result in every time it starts getting chased up, it's going to lead to people buying and buying and buying, and they're going to raise their limit orders, and they're not going to sell, and so the market is going to have to entice those sellers, and these ETFs will have to buy, because they have to satisfy the demand of the customers. They have to make this Bitcoin available to purchase. And if they don't provide enough shares, then what will happen is the ETF will start to deviate upwards. Exactly what we saw with Grayscale. So we've seen this happen. The ETF will represent spot Bitcoin. It doesn't have to be at the same price as Bitcoin. It simply represents a claim on one Bitcoin. So yeah, we can see this we've seen this play out before, and during a bull market, these ETFs will develop a premium if the demand is there, because these guys won't want to chase the price up in order to buy new Bitcoin, because if they have to buy new Bitcoin, add it to the fund, then people it is hyper bullish, and the problems with the hyper bullishness presents its own problem, because you've got to provide supply to meet the demand. And so as this goes on, but what we're talking about how often do you get paid? Monthly. We're talking about years, multiple years before this is this is going to be a continuous ongoing supply shock contributor. It's not, it doesn't mean shit today. It's not to say all these funds already have the Bitcoin, they already bought it, they already or seeded it, they already got whatever they need to run these funds. Will they need more in future? Yes. Is it a good time to buy any dips that come from the fact that now it has launched and people go, oh, there's no pump, there's no anything, we're sat right up at multiple we're up at a serious resistance level, the level that we've been talking about for months. So
48.
So technically there is a case to short here. Is the demand from this ETF going to impact onto the spot market soon enough to prevent a 20, 30,
Yeah,
40,
to
50, 60, whatever. Bitcoin can be
exactly
whatever.
to mitigate that
Yeah.
sell pressure. Yeah.
No,
No,
what is clear, the buying already happened.
yeah.
They'll be buying in the future, but right now,
Yeah.
it's done. This is it. The
No,
ETF pump has already happened.
I think my thinking here is pretty simple. It's like ETFs got listed. Everybody in the crypto space who wants Bitcoin has already bought to front run the ETF, right? Simple. They want to get in before it pumps. The pump happens and it's not that significant. It hits a major resistance area, not a line, but an area, and people start taking profits. There's a lot of people that's built a lot of longs during this pump or previous to this pump. I know myself, I added to my long when just before the pump started, just because I had a long built and I wanted to add to it before the big pump happened. So
He's
I did.
Greedy boy.
Well, that's what you do, right? So, but yeah, so a lot of people build some longs. You get the pump, and then you get the dump that kind of starts eating into those longs and liquidate them. Then you get this cascade that we had. It's not a huge cascade or anything like that. I mean, it's a bunch, but it's not a massive.
A period of continuous sell pressure.
Yes.
And not much buy pressure at resistance.
Yeah. Exactly. And so
solid.
What the ETFs is doing, at least for me, is it's putting the supply shock that's going to be more apparent after the halving is already starting to get become a reality because of a lot of the people that buy ETFs a lot of the people that will be buying this in the future, not exactly just like right now maybe, but a lot of people will start to allocate to this ETF, like you said, with like your pension or whatever. And that means you're essentially taking liquid Bitcoin off the market and holding it, right? So the supply crunch, the amount of liquid supply of Bitcoins on exchanges will be shrinking and shrinking and shrinking over time, as it always has been, but now probably a bit faster. And then we have the halving coming, and then you get that supply crunch where it's suddenly like, oh, there is no new Bitcoins coming onto the market. It's just half of that, and then you have people kind of eating that up. So, and that just mathematically means price go up over time, not over day, over 1 day or week or whatever, but over time. Lots of new buy pressure. That's what it is.
There's always a good tweet I remember, which was that an asset cannot simultaneously be stable and the best performing asset. Because if you had such an asset that just kept on performing and went up and up and up and up and up and outperformed everything, what would everybody do? They would buy that asset, and they would buy that asset at any price, to the point where it became overvalued, which would then, because the sellers would go, oh, this is overvalued, and the price has come down, and that is volatility. And the better performing it is, the more volatile it is. It's just a feature. It's a feature of Bitcoin. Enjoy it, make the most of it, because this is the best thing about it. It will always give you another buying opportunity, and it will often give it you lower and later than you expect. And patience will be rewarded if you can, even if you just blindly DCA or use tools to DCA with, then you can just wait, patience, because everything that we're talking about here, this isn't really in place today. This doesn't exist today. It's a multi-year building process, and it's a very, very good day. It really is. It might not feel like it. It might feel a bit dull. We pumped and dumped. Right, great. Bitcoin does that all the time. We're not at 100K today. Sorry.
Yeah. Oh no.
Keep waiting.
Well, but so essentially, what's happening here is that more people now have access to start accumulating a little bit, every month or whatever, to Bitcoin, in a simple way, because most I don't want to. Okay, so boomers are not gonna sit here and start trading spot Bitcoin and investing in spot Bitcoin if they know nothing about trading or anything. You have to put yourself in the mindset of take the mindset of one of your parents, for example, and say, what would they do? Would they start allocating to spot Bitcoin, or would they see that their bank or their asset manager suddenly says, hey, by the way, here's a new product. If you want to take a little bit of risk, this is probably a good idea over the next 5 to 10 years. And they're going to be like, okay, yeah, take 5% of my, or 1% of my portfolio and start putting it into that, and then add that from my savings every month or whatever. And that's the more people that do that, obviously, is going to make a bigger impact. But it's not going to be a huge pump. We're not going to necessarily see like a god candle with weekly candle with 80% up or anything like that.
Because also it depends on how these funds are going to allocate. So what I will imagine is what they'll do is they will buy chunks of Bitcoin and then they will add them to the fund. So yeah, the fund will trade and it will deviate away from Bitcoin. And this is going to be quite interesting, because if you've got patience, then you can yourself arbitrage this in the same way that people did with Grayscale, where I saw it earlier and I looked at the Fidelity ETF was trading at 41,000, spot Bitcoin was trading at 46,000, and there was another ETF trading at 47 something. So you've got three prices there. If you've got cash on all three of those platforms, you can just sit there arbitraging this difference all day long if you are smart about it. And this is a huge amount of capital that has access to this, the most sophisticated trading bots on the planet. Welcome to a new paradigm, quite simply. The bots are now currently, I guarantee, in development, that we're going to sit and they're going to manipulate the hell out of this market. You can call it manipulation. It is simply adding and subtracting liquidity at opportune moments to move the price favorably in a direction you want.
Yeah, the only difference is that it's exactly what everyone else does. It's what I do, it's what you do, it's what traders do. That's the whole point of trading. Well, not the whole point.
It's what we wish we could do if we had enough bloody money, but we don't. Yeah, and they do, so they can, so they do.
Yeah, precisely. Simple. It's as simple as that. It's
because they can, they do.
And this is why I keep telling you. I mean, I've had a whole bunch of people approach me lately because of the Bitcoin price going up and asking me, you're into Bitcoin, right? You're into crypto. Like, how do I trade? And I'm like, you don't. You want to move into Bitcoin and start trading it? Have you traded before? No. Okay, then don't. Get into Bitcoin and start investing in it. Take the long approach. Think about it like, if you're willing to, if you think you're going to put in $100 and get $10,000 out in 3 minutes, no, don't do that. Take $100, put it in, and say, I'm going to take profit from this in 4 years. Think about a whole cycle or peak or whatever.
Yeah, but I can trade Shiba Inu Floki Coin.
Yeah. I mean, I've even seen, which is funny to me, some people that are, I mean, let's take James from Invest Answers, which is someone that I personally watch a lot and I respect. And because of the data that he puts out there, right? And even him starting to talk about, so I got a position in Bonk, and I'm like, if you're trading it, yeah, for sure. But at that point, you're talking about a trade, not an investment. There's a difference. There's a big difference. It's just funny to me to see even those extremely, risk averse people like myself. Suddenly, I'm sitting here doing 25x longs on Solana futures or whatever, and just saying, yeah, YOLO. I can't help it. It's fun,
Not financial advice.
No, for sure not. No, yeah, it's the first time. Even you remember the first time I put $100 in just to mess around with futures. I messed up and I liquidated my bag after like a day. Like, yeah, that was. But I kind of did it on purpose because I wanted to make sure that I really felt how that would, because it's different when you're playing with leverage. It's different and it's dangerous. Yeah. So unless you get to feel that, like, whoops, that was fast type feeling, then you're not going to take it seriously.
Yeah, there's certain levels. So I'd say level 1 is when you lose your first sort of $100 bag. Everyone starts off with $100. They make a few lucky trades and then bang, gone. And that's kind of gutting, but $100, okay, that's fine. You probably took it from your profits anyway, so yeah. Okay, well, I'll start again. It's the $1,000 loss that hurts when you get a little good at it and you go, okay, right, yeah, I've taken my $100, I've built it up to like 250. Cool, yeah, I can do this. Because you've made 150% profit. We completely ignore the fact that the total market cap has gone up by the same percentage in that time. So all he could have done, he could have just thrown the dart at a board and full of coins and bought whatever it landed on, and he'd have made the same amount of money. But suddenly, no, now he's a trader. And so the next level is, great, let's put 1,000 in. I know what I'm doing now. And then the first 30% dip comes.
Yeah.
Think about that January 2020. Was it January 2021 or early 2021, where it just run in pretty much a straight line from 10,000 to 42, and then it dropped to 28 in a day, and that is not something that people are prepared for, and so they lose their first 1,000, and then they go, I've learned my lesson now. Okay, great. So I'm going to go again. I'm going to do it now. I've made a decent amount of money. Okay, great. Let's put in another 1,000, and then the market carries on going up, and it turns into 5,000, and they get cocky and they open up a 5, 6, 10x long with their whole position, and it sits up in profit, and then it drops and rolls over 20%, and they get liquidated, and they think, and that's the first time they lost 5,000, and suddenly they look at it and they go, oh shit, if I'd have just bought Bitcoin. And okay, so I can tell you who that story is sort of based on, and say, that's me.
Well, this is what I keep saying. If you don't live it, you're not going to be able to take it seriously.
Absolutely.
So this is why I said, when I did this for fun, the $100, I was like, I'm gonna go ape shit on this. I'm just gonna do 50x, 25x, just to feel that, when you have a 50x and Bitcoin moves down 0.3%, that's 0.3 times 50 in percentage terms, right? Ouch. Okay. And then suddenly you're like, oh crap, I'm really close to my liquidation. I think it might bounce near my liquidation. So I'm not gonna put a stop loss because I think it might bounce, or I'm not gonna close the trade here because I think it's gonna be bouncing up. And then it does that. You walk away for a piss, come back, gone, right? It's that thing is, I have a friend of mine who's asking me about like futures and trading, and they kind of want to get into it, and I'm like, look, I'm not saying you're not smart enough to do it. I'm saying you haven't survived the market fluctuations on a long time frame on spot without any leverage yet. You don't know. Like, trust me. No. I was told this myself. You told me this when I started doing this stuff in crypto. Another staff member, Jay, told me the same thing. You have to sit through this stuff, like at least survive a cycle or a bear market section of the cycle, just as an investor, so you understand the feeling that you get, or how to avoid the FOMO, how not to fall for the FOMO or for the FUD and all that type of stuff. Like if you're gonna start trading something, trade spot first. $100, get in, make sure it's actual money in there, not paper trading, because then you won't feel that pain.
This is the thing. If you cannot make money on the spot market, you will never make money on the leverage market.
Correct.
Never. You absolutely not. And this is because what people think, say step one, people think that with leverage they could suddenly go and, okay, great, I've got $100. That means I can open up $1,000 worth of position, and they go and open up $1,000 of position straight away, and then the price drops 4%, and they've lost, boom, 40% of their bag immediately. What they should be doing is having the $100 on spot, splitting it into 4 or 5 positions and going, okay, I'm going to buy $20 worth, $10 worth. I'm going to actually try, and I always will use this calculation on everybody, is 3% per day. If you can do a 3% trade every single day, then I think it's within, I'll just do the numbers, which is that if you do that for 2 years, you will
And
have
compounded bag, yeah.
3% per day for 2 years will be $2.3 billion if you started with $1.
Yeah.
So can you make 3% a day? Because if you do that, if you can make 3% per day for 2
On
years,
average,
you
yeah.
will be a billionaire.
Mhm.
So why are you rushing? Because
Yeah.
guess what? You ain't going to make 3% per day. Because if you could, there would be a lot of billionaires out there. Because 3% per day, it's genuinely harder than it looks. It's
Yeah.
and I've been doing this now this is my 7th year, and I am far from an expert at it. I'm so far from an expert at it that I spent thousands of hours developing trading strategies so that I didn't have to do it myself, because I understand that I'm the weak point in my trading strategy.
Yeah.
And
it's the emotional side that gets you.
It's and that's
sure.
That's what needs to be mastered.
Yeah. So okay, so we have a question actually. Yay. So Mux here, he says, what advice can you give us who spot trade only? There's an extra part there. Well,
I guess for
it's
starters,
kind of
as we just were saying
yes,
there.
as we kind of just said, like if you're looking to start spot trading, and well, the first thing I always say to everybody is, number one, first know what your time, like what type of person are you? Again, I'm just gonna go off my own preferences here. Like if you can figure out first, make sure you know who you are. Okay, who am I an investor or am I a trader? Like what's my how many times a day do I want to trade? Do I want to trade once a week, once a day, 3 times a day, once a month? Make sure you understand, like you want to know how much you want the price to move before you want to get in and trade and get out. Make sure you know what your preference is. You know, if you're like me, I'm mainly an investor. So my trade is essentially, you know, from bear market bottom to peak. That's the goal. Bottom to peak. That's a 2-year trade. Okay. Which makes me kind of more of an investor. Because you want to hold it long term. But if you're somebody like, you know, okay, let's see. Okay, he's added to this.
Yeah.
I only buy if I double my money, I take profits. Okay, so essentially you're investing into something, and then you make sure you take out your initial once you get, you know, the double, and that's a smart thing to do. I'm gonna say that straight off the bat. Taking out your initial is pretty good, because then your profit is your risk, so you still have your initial left, and then you got zero risk in there. So, you know, like I said, just make sure that you know what your time preference is, and make sure that you know what you're buying. Like I have a lot of trouble saying, oh, you can trade whatever you want. That completely has to do with what your time frame is. Because if it's a very long trade and you say, I'm going to buy Bonk or Pepe or Shiba, that suddenly that becomes a very risky trade. But if it's like, oh, this coin currently is pumping or in an uptrend confirmed, and it's looking kind of pumpy, okay, make a scalp trade there. You know, get in, wait for 15 minutes, get out. Take like 2% profit, 1%, 3%, 10%, whatever it is. Then it doesn't matter what you're getting into. But if it's a long-term trade, you got to think about, is this actually something that has a future? Let's take Solana, for example. For me, that's a very long-term trade, because I believe in that project as a long-term investment. Would I do the same with ETH? Yes. Would I do the same with Matic? Probably. You know, it's one of those longer things. But if you're planning on, you know, getting them in the $100, and then, you know, you want to make a trade every day, or maybe tomorrow you want to sell that trade. At that point, it doesn't really matter what you're looking at. Just make sure that you understand that the smaller the coin, the more volatility, so that if you get in and it starts pumping, and you keep your eyes off of that, and then suddenly it just goes, and then you're down, well, then suddenly that either becomes, you know, I have to sell this before I make too much of a loss, or, oh, I'll wait until it's in profit. But then it might never be. So it's
a lot of people have waited for coins that have dropped 99% down from their entry.
Cardano. What? Sorry, what was that? Sorry. No, I'm not making fun of Cardano fans here. I'm just saying
Hey,
maybe
well,
it's not the best idea to hold something that's downtrending and downtrending and downtrending. If you really
any
believe in
safe
it,
room fans?
well, I mean, like, if you really believe in something, like Solana, during the Solana downtrend, I was holding. I'll admit, from all-time high, I was holding most of the back. But I was holding it because I was lowering my cost basis. Every time there was a dip, I bought, and then I bought, and then I bought. And that's an argument, because that's an argument for a long trade. But again, if you're a short-term trade, like if something starts going down and you were planning on making a 3-day trade on Solana and it starts dumping, it's probably best just to take a small loss, get back in when it's actually bottomed out, and then make the trade from there. Something like that. This is not financial advice or anything. It's just that makes sense to me, and I think that makes sense to a lot of experienced traders as well. So I hope that helped you. I bet Rob has something to add to that, though.
I guess this is all I would say is, and this is genuinely the number one piece of advice, is buy partially, sell partially.
Mm-hmm.
Don't go all in or all out at basically any point, really. If you've got a point where you have a trade where you're going to buy something, and if you're trading, this is it. So if you're not investing, if you are trading, then if you should have, say, multiple buys, multiple conditions for buy. You should be waiting for those conditions to be met. You should then be purchasing, in pieces, not all in one go, and you should then have a stop loss in place. Maybe your first trade, you might not have a stop loss in place because it's only 20%. If you've got $100 and you've made a $20 trade, sure, you can hold that without a stop loss for the time being. Wait to see how it pans out. 40, 60. Okay, now it's like, well, you're half allocated. How much drawdown are you willing to take if this trade goes bad? So then you think about, do I need a stop loss? If it moves up into profit, or then you go, well, now I can guarantee not losing here, because always remember, the first priority of trading is not to lose money. It's not about gaining money. It's about not losing, because if you don't lose, then that's the aim. It's not about even beating the market. If you want to beat the market or match the market, be an investor. Don't be a trader.
Yeah. I want to add to that, and now I almost forgot what I was about to say, but preserve your capital before you try to make profits. Like, preservation of capital is always going to be number one on the list, especially if you're trying to trade. Make sure that you only take, if you're getting into a trade, like I said, and with a stop loss and all that, if you get in, like you said, if you layer in it with 25% of your bag, and say you have $100, you put in 25, and then before you even buy, make sure that you know that I'm willing to let it come down to here, because that's where my last support is. And if it fails that, I'm going to close this position and take a $2 loss or whatever, instead of, but if it bounces on that, then okay, maybe you should allocate 25% more to lower that cost basis, right? That's why you want to layer in and layer out. So on the way up, like you said before, if you double your money, you take profits. Perfect. Like, let it come up, get half of your bag out, or 75% or 25%, whatever you need to take out your initial. And then after that, just let that build, Definitely.
So what I can share is, I can share my technique for trading, which is, so it's not spot trading, but it's a pseudo spot trading method, which is, so I'm trading on leverage, but I'm trading I only trade basically the cash that I have available in my trading portfolio. So I've got a chunk of cash which is sat running on my trading bots. It's all automated. I don't touch it. And so what I do is I make sure that my position, I use a coin margined futures, whereby, so I'm using Bitcoin as my collateral. And so I open up my positions, and I'll never open a position larger than the amount of cash I have at hand. So I'm using, I'm using a relatively small amount of Bitcoin to trade my entire trading bag independently of my actual portfolio. And basically because of that, if a trade goes wrong, what I can do is I can say, rather than taking the loss or taking a complete loss, I can say, okay, I'm going to close $5,000 of this position on the futures contract, but I'm going to buy the equivalent amount in spot Bitcoin. And then all that means is that's essentially, instead of absorbing the loss and having a realized loss, I'm going to take it, buy spot Bitcoin, put it in my bag and forget about it. That was a bad trade. I took a loss, but because if you can move it into your hodl bag, if it's something that you're willing to hold long term as well, then you can kind of avoid that mentality.
Yep.
If you trade, if you're trading with a certain amount of money, say you can put $100 a month into your trading portfolio. Do that, but make sure that if you you would only ever take so much of a loss before you say, okay, I'm just going to put that into my hodl bag, my long-term portfolio, and then next month I'll have enough money to carry on. And you can, buy, but if you just say you buy partially, you scale into positions, and you just exercise really risk management and consider what happens when this trade goes against you, or what could happen, because you can lose money a lot faster, and in crypto particularly, you do lose money a lot faster than you make it. It takes staircase up, elevator down. So
yeah,
as you
that's
said,
a very good
here,
metaphor.
What do you think happens now, going slowly up or sideways? Well, I don't know what's going to happen now. We don't know exactly what's going to happen now, but what we can see, we there's certain behavior I expect to sort of see continue. And if we can maybe I'll just present.
Yeah, I'll just very quickly say, what we talked about earlier, what we think is going to happen, and I'm assuming you're talking about Bitcoin overall in the crypto space. Like, it's one of those things where the sentiment is very bullish right now overall. Fear and greed index is at 75-ish. Everything is in an uptrend. Long term. Last year was a huge year for crypto. We had Bitcoin at 170% up. We had, Solana went up 1,000%, etc., right? There's nothing to suggest that trend would break at the moment, like long term. But that doesn't mean that we can't see, first of all, even now after an ETF has been is being traded, that we can't see a huge dump down 30-40%, just to kind of reset all the indicators that currently are very much at the top, and that would probably be pretty healthy, even though it wouldn't feel very nice,
Yeah.
But it would be very healthy. That the big dip never feels nice unless you understand the fact that, oh, there's a huge dip coming, and my bag is going to lose value. Okay, well, open up a short maybe, and maybe you start saving up some cash to buy spot as soon as you think it's bottomed out. It's like, that's fun. You get cheap coins. After the dip, you get cheap coins to just get in. But yeah, Rob, you were sharing something. Sorry, I didn't mean to.
Yeah, maybe just no, it's fine. Maybe just stick my screen on. So yeah, very long-term sort of perspective on Bitcoin. And so, what should we expect? Okay, so what we can look at with Bitcoin is there are very particular patterns which tend to play along, and one pattern which is very much repeated. Where is my bars pattern? Which I don't hear people talking about so much, but to me, it's kind of quite clear that this cycle is very much a sort of repeat of 2013 to 2015 in its overall sort of behavior. Let's just get rid of the moving averages. And okay, yeah, it's not exact, but it's kind of pretty exact, isn't it?
Yeah.
And so what I'm expecting to see is what if you think about what happened here, about what this period of time was. This was before Bitcoin went mainstream. This period of time here was when it was relatively under the radar. I remember I purchased my first Bitcoin right about here. I bought it, incidentally, I bought it at $4,600, and within a week it hit a low of 3,000. And I was immediately 30% down. That was my first purchase of Bitcoin. So, when people tell you to be patient and calm and wait for an opportunity, they mean it. That doesn't mean you can't buy anything at all. That doesn't mean you can't DCA. absolutely, I would recommend to anyone get off zero. If you have zero Bitcoin, I don't care what price it is, start buying it. Buy it every month. Don't just buy it and don't stop buying it, because if you do that, if it drops, you lower your cost basis. It's just, if you have a plan to buy something forever, it's, unless it completely fails, the chances of losing money on it long term are
very
slim
slim.
to none. If you're buying pretty much the most bullish asset in history, I'd like to think, not financial advice, that the odds are in our favor. So,
I mean,
and so what we have to put, so getting back to it, is that what we saw was during this period of time, Bitcoin was relatively under the radar until it sort of went a bit nuts in 2017, and this was kind of the last for me. This was when Bitcoin stopped being pure. Right here, in fact, no, I'm going to give it right here. In fact, this day, 17th of December, the all-time high, which also marked the launch of the CME futures, the first institutional grade Bitcoin futures market, and it launched right at the exact top of the market. And what then proceeded was a year-long downtrend, and it's really sort of wasn't pretty. And what was clear though is that before this listed, if you wanted exposure to Bitcoin, you had to buy Bitcoin. So you had no choice but to just buy it and hold it, unless you wanted to degen and go to BitMEX, which was pretty much the only exchange offering futures at that point. So they bought it and they ran it up, and then the ETF, not the ETF, the futures exchange actually launched, and suddenly this asset class, which had a market cap of $400 billion, was open to institutional grade investors to short. So what do you think they did? They opened up an absolutely gigantic short position, and then they dumped all of their spot Bitcoin right onto the market that they'd just run up. Easy. People would say it's manipulation. No, it's just taking advantage of an opportunity.
Yep.
And so this was, before then, up until this point, I'd say, Bitcoin was pure. This was pure price action. This was just technicals doing what it is. Mt. Gox kind of essentially caused this bear market. Everything bottomed. We had a textbook accumulation and then moved into an uptrend. And now we're in this world, as we mentioned, sort of with around the potential for passive investing to take place in Bitcoin, whereby people just buy it month after month after month at a scale that we've never heard of, maybe sort of quite similar to this sort of historic price action. And I'm kind of hoping that we get to see a sort of repeat of this trend, whereby probably a bit more extended and played out, but even something sort of like this, where it might take a lot longer. Maybe we go a lot higher than people think. Although that's 1.5 million. That's quite, or 2 million.
That's a lot.
That's high enough. But like looking at the overall trend, and you go, if there are, I don't know, 10 million people, 50 million people putting an average of $100 a month in, that's $500 million a month. Of inflow
of passive,
And if you look at what that is, the number's not exact, but roughly as an estimation, you can say that $1 invested into an asset class raises the market cap by somewhere like $25 to $50. Now, during an accumulation phase, that would be relatively little, because the people purchase huge amounts with fresh capital, which doesn't move the price because there are willing sellers. But then during a bull market, a dollar into the market can make huge multiples in market cap. If you think about it, if there's no buy orders with Bitcoin at 50,000, if there's not a single buy order between 50 and 55,000, if I buy $10 worth of Bitcoin, I instantly push the price up 10%. Congratulations.
You meant sell order.
Yeah. But I've just added billions of market cap with $10 worth of liquidity. It's not real, it's not sustainable. But that's what blow off tops are. They are unsustainable rallies in price, which the market can't handle. And with these monthly inflows that we will hopefully start to see very bigly, then it's kind of inevitable that we move into a long-term up only sort of motion. In my opinion, it's chart goes up and to the right. So
Yep.
does that mean that we can't move down in the meantime? We're absolutely going to move down in the meantime. The faster we go up, the deeper and more prolonged the downtrend is.
Yep.
So
That
yeah,
story of my life, right?
yeah, exactly. We either grind up slowly and boring, perfect DCA territory, and maybe that is exactly what we get. Maybe we get 3 years of just dull, slow grinding with occasional bouts of pump and dump. That would be beautiful. Great, we can all get rich. It'll be boring as hell, but yeah.
I mean,
Alternatively, everything goes nuts. There's a new hype cycle, and we blow off top all over again. And the ETF people get to buy the bottom of the next market and corner it.
Yeah. Well, I mean, if you look at the macro side of all this, like we're about to hopefully get out of a pretty significant dark age of global markets. We've had really high interest rates, we've had inflation going off the charts and everything, and things have not been looking good for the past 2 years, right? And we're starting to move out of that. Obviously 2023 was a great year for crypto, but the thing is, you got to remember that markets are front running, right? They especially Bitcoin seems to front run a lot of things, and this could very well just be a pre-bull pump, which we had back in the previous bear market in 2019.
2019 we ran from 3,000 to nearly 14,000, and then all the way back during the COVID crash to below 4. So
yeah, well, this is what I'm trying to say.
It can happen.
That can happen. And I mean, even the weekly RSI, I'll actually open that up just to show you what I mean. Let's see. So even the weekly RSI right here is very much topped out. It can still carry on for a while like it did over here. But I'm thinking more like this here. Like we had this top back in 2019, big pump, big dump. Weekly RSI was up here. We're seeing about the same thing here. What's stopping us? What's it could very well just go back down to this trend line right here, which we bounced on the last time during the COVID crash as well. Or why not, right?
Phil, remove the comment.
Oh, my bad. There you go. So, if we can get this kind of bounce again, that would make a little bit of sense to me. Maybe we go back and try 30K again. Just a slow kind of downtrend like this, reset all the indicators, everything goes back into oversold, and then we get that big thing, the big pump in April when we get the halving, right? Why not?
So yeah, I'll disagree on that. I think if we hit 30K, it won't be slow.
Oh well, maybe not slow.
It will be.
That's one scenario.
Something. Yeah. I don't. Personally, I'm still in the bullish camp. I think people should temper expectations, because as you can see on the chart there, we're slap bang up at basically what is 2-year resistance. We've not been here for a long time, and people who bought below 20K are, they're sitting pretty right now. And if they choose to take profits, and those people outweigh the people who are buying, and as we've discussed, the any buyers right now, unless they're fundamental buyers, they're FOMO buyers. If you're not buying now to hold for the next upcoming years, to wait for all of this money to fly in, if you're just buying for the short-term fix, you're disappointed, because if too many people pile on in this one direction, the market will simply punish you, and it will push the price against. The market loves to trap late buyers, inexperienced buyers, and FOMO buyers. It will trap them at the top during highly overbought conditions like these. Does that mean it can't continue? Absolutely, it can continue, but things definitely could use some time to cool off.
Yeah, this brings me back to what we were talking about earlier. The market loves the experienced people love to trap and mess up the new people that come in and don't know what they're doing. or that are not used to the volatility of crypto, etc., etc. This is why I always say, when you get into this stuff, spend a year or half of a cycle from peak to bear, whatever you can. Spend as much time as you can as an investor. Think long term first. See all the market moves. Understand that, oh, okay, suddenly we can get a 30% down candle in a week, or in a day even. It's like, that's why I keep pushing people to think like that when you're new in this. I mean, if you got experience, you already agree with me. I think it's hard to find somebody with a couple of years experience in crypto saying, "Oh no, you should definitely be buying here." They would say the same thing I do, and it just comes with, you have to survive those market conditions. You have to survive this type of dump, and then realize, oh, it can rebound really fast, and then you have to survive an entire bear market, and you have to survive these black swan events where things just go completely nuts for no reason except for I'm not going to say no reason, but like it doesn't make sense. It just goes suddenly. You have to experience that pain, or that shock at least, by thinking long term first. Yeah, you won't be able to understand. We can tell you as much as we want, but you really need to just get through it.
So yeah, I've mentioned it before. So my dad started buying Bitcoin in April 2021. Great time, and it was. But this was basically there, and this was after, obviously, well over a year or 2 years or 3 years or however long of me saying you should be buying it. He finally decided to buy it, and I completely approved of it because, as I said, it got him off zero. And if the price continued to appreciate, then he would have been made some money and he'd been happy, but he wouldn't really have been buying much because the market was clearly already at a premium. I didn't know how long it was going to continue. So yeah, as just said, carry on buying it. And he carried on buying it. And he's still buying it. And every single month, the last coming up to 3 years, he has been purchasing every single month. And it's made him far more than the alternative, which is having that money sat in his savings account or sat somewhere that it wasn't doing anything. And he's not a savvy investor. He's not somebody that's been involved in investment in his life. And all I did was set him up with a recurring buy on crypto.com. And he's stuck with that ever since. And although I could do it better for him, I don't want to get involved with it. As I say, I'm not his financial advisor. I'm not there to I just want to make things as simple as possible. I don't want to add complexity to him because he's 59 years old now. He doesn't want to be involved in the whole let's set up strategies and watch markets and trade and pick up. Nope, he just wants a happy retirement, and that's what I've hopefully successfully encouraged him to obtain.
Yeah, and this type of thing, you set him up on crypto.com. Right, he was able to do that because he has somebody willing and with the knowledge to get that done. But now with the ETF, this is kind of an ETF stream. With ETF, that suddenly becomes much simpler for a lot of people, right? And this
for
is
a lot of people that just have brokers who just
It's like I know on my bank, I can just go and click on savings. I click that, and then it gives me options. Do you want to buy stocks? Do you want to buy index funds? Do you want to do I don't know, I'll buy this thing, and then they just give you a small description of everything that they have, and you click it, and then that's it. Once it's that simple, and now that the ETF is out, we have major players that are going to, I mean, I've already seen 2 commercials for Bitcoin now, one from I think Van Eck and one from whatever.
Another one.
Yeah, another one, right?
Another.
It's just suddenly there is now going to be ads for these ETFs going around, and suddenly the mainstream is going to start saying, maybe Bitcoin is a legit thing, right? Which is going to help with mass adoption, or at least mass investment or whatever. So
exactly.
That's good.
It is, of course, it's good. I think that there are a few things that people say maybe should be aware of that's that the normie doesn't think of, which is that with this new source of people to to trade Bitcoin on, does come say a new wave of money who these I have mentioned, these are the most sophisticated traders on the planet. These know how to move and how to push up and down big markets, and we should be aware of the potential for Bitcoin to sort of be goldified, whereby so much of the market is basically taken up with either futures contracts or institutional contracts that these are the big money purchase. Gold is completely manipulated by the man, the system, that
Peter
whatever you
Schiff.
like to call it, the Peter Schiffs. Yeah, it's a government asset. It's not an asset for the people, and we should just be wary that, although of course there are benefits that yay, great, the government's going to pump our bags. Cool, they will. All they've done, maybe this ETF, this speeds up the process slightly over, where it's inevitably going to get, but it has. It's you've opened the door now. The wolf was at the door, and now you've just cracked the door open. You've gone, hey, come on, little puppy, come and pump my bags for me. The wolf's inside now, guys. We've done it. Congratulations, we made Bitcoin an institutional asset. It ain't going to all work in our favor, like it or not, and this is going to come with more calls for KYC, less security. A lot of these funds are going to have to interact with Bitcoin wallet addresses. They are going to want to know everywhere that this Bitcoin has been, as much as they can. And so they now have, if they're going to run multi-billion-dollar funds, well, they've got a lot of incentive to hire chain analyzers and people who can quite successfully track and map where Bitcoin has gone and where it's been. So be aware of that. That's something that the more institutional eyes on it, and whether or not you care about, people say, okay, I'm not doing anything wrong. It's for the taxman might, and they, I can guarantee you that if Van Eck or Fidelity, if they open up if they discover a load of tax avoiding customers, that they could be persuaded to hand those details over, because I know Coinbase do, and they're supposed to be on our side.
Yeah, well, I mean, something that you got to keep in mind too is that with this ETF coming out, and with all these ads going out, and more mainstream people starting to kind of get into this, there's going to be a lot of people as well that are going to see all this and start learning about Bitcoin and actually finding interest in it, which eventually brings you to kind of where we are. You become a Bitcoiner, or a crypto bro, or whatever you want to call this. And that means that those people are going to buy spot eventually. A lot of people that start with the ETF, I think, is going to start buying spot, which is good. And they're gonna hold their own coins.
Yeah, well, basically, the market will incentivize itself. So, like I talked about, so how each ETF may end up having a different price. Well, if you have access to them all, then obviously you're going to buy the cheapest one. Now, if those have got limited amount of Bitcoin and they start trading at a significant premium, well, if your spot Bitcoin is $70,000, but the futures contract is 80, or not the futures contract, the ETF is 80, then that gives you a significant financial incentive to buy spot, and so people will be dragged into purchasing spot Bitcoin because of the fact that the ETF is more expensive, and as the ETF gets too expensive, they'll notice their volumes dropping because they're too expensive, until the spot market catches up to it, and the system will maintain balance as it, it'll bring balance to the force as it is. In that Bitcoin will always.
I can't believe you just quoted Star Wars.
Of course we are. Bitcoin will always come back to its fundamental value. It can deviate away from it, but it will always swing back because you can't push the price down too far and you can't hold it up for too long. It just doesn't work that way. Money flows matter.
Yeah. I thought I'd just put the Bitcoin chart on the 1 minute scale on my screen, just since we're talking about stuff.
Yeah, that's a good.
See where it goes. It seems like it's currently hitting a long-term fib level right here, and
we have
I think that's one of our 46,850s. I think this is where we put a line from the. It's the weekly close, I think, back in whenever that was.
Okay. Back in whenever that was. Yeah.
Yeah. Sorry. It's. Oh God. Book over here, March 2022, end of March. Yeah. So.
No, it's the weekly high. We could put the weekly close on there as well.
This one is the weekly.
It looked like the high to me.
No, that's the weekly close. That's the weekly high.
I see. Okay, I see.
Yeah, I tend to do both.
Cool. No, I thought you would have done. That's why I was confused. It was missing, but I didn't realize it was that far.
Yes.
So yeah, we can go up there.
Yeah, we'll see what happens here. I mean, obviously we had this big dump here. It's quite apparent that it was a dump, yeah.
Yeah, this is it. The ETF launched yesterday. There will be a certain amount of FOMO buying, and that FOMO buying can carry on for a while.
Mm-hmm.
I didn't say it. I didn't do it. A while.
Yeah. Crypto Talks endorses Family Guy.
Say a while.
So
it endorses Family Guy.
So, we like cool whip.
Little bit of addition, little bit of just slight enunciation of the in the whip, little bit, maybe go a little bit.
Someone's gonna clip you doing this, Rob.
That's fine.
No, like we're here because we want to be here, and I don't mind making a fool out of myself. So,
as for me, I was born to be a star.
Yeah. Great.
Sure. Great. Come on.
So I like here we got a little nice from Kavik here.
Exactly.
Bitcoin is part of the force. Bitcoin is force, bruh. It's all around. It surrounds us. It's everywhere.
It's it's like what people talk about, say Bitcoin being manipulated or price being held up, price being held down. Like, it's one of the least manipulatable assets that there is because it trades 24/7. So whoever's manipulating it at this time of day ain't going to be manipulating it while they're asleep, and anyone can get access to it. It's got there is no way. And if you say the price, because it is so available to trade, when the price goes too high or when the price goes too low, there are plenty of sort of mechanisms for reining it back into this just natural growth trajectory. And this is the thing to remember now, is that we're at 47,000. 47,000 today is a lot cheaper than 47,000 3 years ago or 2 years ago. And we should remember that this is not the same price and this is not the same asset as it was in 2021. It's had more years to mature, and it's done a hell of a lot of more mature. It's done more maturing in this cycle than it has through basically any, because we've kind of we've completed it. This is it now. Bitcoin is now an institutional asset class by essentially any standard, apart from the adoption of this asset and the use of it. So, yeah, I think it's going to be a good couple of years.
Yeah, I mean, 2023 is basically defined by most as the pre-bull, right? And if you thought that last year was kind of nuts, 2024, 2025, depending on how long the bull market's going to be, it's we got so much tailwind right now because we have the ETFs, which brings us out to the mainstream a lot more than we ever have been. And you know, on top of that, we have the halving coming up, and a lot of people say, "Oh, the halving doesn't make that much difference anymore." It's not that much of a difference, but it is. It's still gonna be. You're still having the new supply for the next 4 years, right? So it's having the inflation. So the inflation will be 0.83%, I think, for the next 4 years after the halving in April, and then after that, it's gonna have that too, and mathematically, Bitcoin will go up in price during that time, and yeah, I can't be more bullish on anything. Seriously, like long term. Short term, is it a great time to buy right now? Probably not. All the technicals are saying, "Oh crap, here's a big top around 48." As we can see, we've been stuck under that range for. I mean,
so that being said,
let's look at it for real.
Can we put it to the weekly for a sec?
Yeah.
So,
Whoa, God.
I'll turn the Bollinger Bands off. You're gonna have to.
I will. Relax. Yeah, the Bollinger Bands on the log scale on the long time frames. It's fun.
So there's a sort of point to be noticed here, which is, you can see that the weekly RSI has been sort of quite heavily oversold, or not heavily oversold, but into oversold now for couple of months. And one thing that we can kind of see is that in each of the previous preceding big drawdowns, we've had a period where the weekly moving average of the RSI ends up in overbought territory for an extended period of time. In 2017, you could see it basically spent almost most of the year oversold. At the peaks in 2013 and 2014, we got this period, and similarly, the mid-cycle run in 2019 and in 2021. It did miss the peak in 2020, the end of 2021, which is kind of something I do like to say, which is Bitcoin's the only asset that managed to make an all-time high during the start of its bear market.
Well, let's look at it objectively, though. Tell me that is not. Oh well. Okay, wait. Let me just. Where's it? There you go. Don't tell me that is not a very large but very weak bearish divergence.
That is
right.
Very.
So that would be very telling, I would say. If you look back at the time there, nobody was really talking about that, though.
No, because it kind of looked like a broader drop and then a kind of But no, it's similarly these very sort of big picture trends. So, for example, the weekly RSI when it drops below 50, it generally is a good time to kind of stop buying and wait for a confirmed bottom, because these big picture trends that Bitcoin has momentum, and when momentum is pointing upwards, you don't fight against that momentum. And right now, there really is no telling that it could just keep squeezing higher and higher if this news alone, as much as it will invite people to sell, as it did today, this news will invite people to buy, and people will buy spot Bitcoin. They will get access to the market purely on the back of this news. And if enough people do that, well, price is going to go up. So, that being said, if things change in the broader markets, and right now it doesn't particularly look like it's going to, then maybe it's, who knows, bull run forever. Nothing matters anymore. Everyone just becomes millionaires. We all get Lambos. Just buy everything. But if only it was that easy, eh? I'm expecting chop. Just a lot of kind of what we see here. I mean, just horrible upwards, downwards movements as the market prices and revalues this asset now that we have these additional markets.
Like fair warning though to everybody, if you're new to this and you're watching this because you've noticed that Bitcoin has an ETF now and whatnot, if you're new to this, or if you're starting to learn about it and everything. Like most crypto people and most people in general, they expect this type of move all the time. Just up hard, sideways, and then up hard, whatever. But the truth of the matter is that now that we have these ETFs, seeing something like this as a standard, just slowly upwards, really boring, a percent or two every day or something, and then a big dump with 15% that messes up that. That certainly is more than possible. We might be seeing a lot more people getting in, but we might also see the price go super slowly upwards, even though it's always upwards. But it could possibly just be a very boring thing to be watching.
I don't think. I think for the time being, it won't be boring at all. I think it's gonna, remain volatile for the foreseeable next few sort of days and or weeks. But yeah, I think it's just going to settle into a pattern of just higher highs, higher lows. It'll have a few weeks where it goes down. It'll probably wick down, make a bottom, sideways a bit, up, make a new high. It's just what we've seen until some sort of hype cycle takes over, which I'm not sure. Maybe it could well be that this process just kicks off a Bitcoin-led bull run, where a lot of coins that have been sort of seen as, I kind of do think at some point we'll have to see a sort of complete detachment of reality, from
reality.
No, a return to reality and a detachment of the utter crap that sort of weighs down the market, and we'll see it just sort of continuously fade. And I hope it'll be it will be harder to launch projects, but the good projects will have more opportunity to rise to the top, I would hope. Now, unfortunately, you can't have a lot of good projects without a whole lot more bad projects. But if Bitcoin heads upwards, people are going to start moving on to onto other projects, other chains. And typically in these cases, the winners, the ones that have been winners so far, tend to keep on winning. And so that's the likes of Solana, Injective, coins where they will be the go-to coins. Ethereum will as well. I would bank quite heavily on Ethereum heading upwards, for the simple reason that if we think about it, which coin is going to be the next to get an ETF?
Yeah,
it's going to be Ethereum.
I mean, it's that, and the fact that Solana, for example, has taken a lot of market share from ETH, due to fundamentals mainly. I would say. I mean, it is a superior tech, right? In my opinion. And the data suggests the same thing, adoption-wise and all that. However, I can definitely see a lot of people that moved their ETH into Solana, for example, during 2023, that are now thinking, it's time to take some profits. Where should I put them? Maybe I should get back into ETH again, because ETH has been slowly chugging along sideways, quite literally, compared to Solana, who's been pumping hard.
I would just like to add some context for, and so why ETH would, obviously, of course, ETH will be ahead of Solana in terms of the likes of ETF listing, but just to give a reason why, there is a total of $57 billion worth of total value locked, according to DeFi Llama. If I may just stick my screen on.
Yes.
So we've got according to this, $57 billion TVL on crypto in total. Of that, Ethereum has 32 billion.
Yep.
Solana, by comparison, has 1.3.
Yep.
And that is not also including the fact that within Ethereum, you also have the layer 2s of Arbitrum, which has more than Solana, Optimism, getting reasonably close to about half of Solana, Polygon, and then you've got all the other EVM chains as well. So Solana, in terms of TVL, does still lag behind by a long way. And in terms of DeFi, this is a huge value proposition, because you need this TVL to basically you can't underwrite billions of dollars worth of loans if you don't have billions worth of dollars locked onto the chain, attached to the chain. So Solana is a long way behind that, and DeFi being the most mature and useful aspect of crypto, that is why people shouldn't write off Ethereum, and why Ethereum is still king, and why Ethereum is almost certainly likely to be the next one to get an ETF. I did have a thought today about, and maybe this is a bit outside the box, and I've mentioned it and championed it before, but a Litecoin ETF would be probably very well likely to be third. Could be a Litecoin ETF, and at something like $75 to $80 Litecoin at the moment is that's it adds some it has some intriguing possibilities, because if Bitcoin is money, then Litecoin is money, and undeniably so, whether or not you think it's worthwhile or not. So if it has value the same way that silver has value as a store of value relative to gold, which is, it was always advertised so as digital silver, then how long before people look at that and go, this Litecoin's got all of the same benefits, but as a fraction of the market share, it simply becomes a better risk to reward ratio. I'm not saying that that's now. I think that this would be a long way off. But you see these things where these kind of these coins that can maintain their fundamentals, so like ETH and like Litecoin, and even the likes of, it'd never be put on ETF, but the likes of Monero, these coins that just sit and do their jobs and don't, they had a job, they do it.
They don't make a lot of noise.
Doge is a coin which, noise or not, it does its job. It just plods along and it processes transactions. So it opens this. The Bitcoin ETF is the first step, and this opens up the door to a lot of other things in the future. This will not be the last crypto ETF. There will be basket ETFs, I'm sure. That may be the way that the likes of Solana get exposure, is by someone like ARK saying, okay, well, we're going to hold the basket, and then we're going to we'll adjust the basket accordingly, and then suddenly you get a top 20 ETF. And if that's weighted, what we would then see is that that would create an inflush, a rush of money in to smaller cap stuff. So there's a whole lot of big things that come from this, and people just have to be patient and accept that these big things aren't here yet, and they need to wait for them.
I'll give you a comment though on the whole Litecoin ETF, thing, but everybody who knows me, that I hunt for alpha stuff, right? If you look at Bitcoin and then you look at stuff that does what Bitcoin does, like Litecoin, let's say Doge does the same thing, it has the same. To me, it's like, what's the alpha of those? Well, obviously Bitcoin, and then I am uninterested in all the other ones. That's how simple. Look, hold on. This is how simple it is. I'm just explaining how simple it is for me.
Yeah,
that's the alpha. The other stuff is beta. I don't care about those.
No,
and then you go, but then you look at something like Solana and Ethereum, where Ethereum is the alpha, right? Technically,
by some metrics. The thing is,
but exactly. But Solana has come along and given people a better proposition. Than.
I'm being devil's advocate here. I agree.
I know.
Yes, I know. However, there's the thing. TVL is king. That is the fact is that most of the collateral, most of the money, which and it's how much money is being trusted on a chain, which values that chain, because say Solana is really, really cheap to transact with. So you don't need to hold a lot of Solana to use the chain for a long period of time. So having fast and cheap transactions does not support a high token price. If token price is, obviously the developer of the token shouldn't really care about the price, they should be building the tech. But as investors, if you want a return, well, Solana's tokenomics, Solana's ability to provide instantaneous and almost cheap transactions doesn't work in favor of the investment thesis. It works against it, massively works against it. Whereas the likes of Ethereum, which is I'm slow and I'm steady. However, if you've got $1 million, I know that you know that you can store it on this chain, and because I've got long-serving protocols, it ain't going to go missing. It's backed by a lot of other funds, a lot of liquidity. There's a whole lot of a much more developed ecosystem here, and that is immediately the place to go. Because in actual fact, if you're dealing with millions of dollars, a $10 transaction fee and a 30-second block time is so insignificant that it just doesn't matter. It's completely irrelevant to what they want to use the chain for. And Ethereum's ability, it wasn't so long ago that Solana does it still say it's testnet? It's now mainnet, but it's
but you gotta keep in mind too, like
same level of trust.
Those arguments work really well for ETH. However, like I keep arguing, and I know you agree with this too, that Solana is not made for the big rich guy. It's made for the retail that are able to, any payment system that goes into the real world, it can't run on ETH. End of story, right? It can run on Solana though, especially after Firedancer comes out. So it's two completely different beasts, right? So that's what I was going to try to get to. Was that
it's just
Bitcoin? Hold on, Bitcoin is the alpha of its field. Solana and ETH are in two different fields because they ETH is for the bigger transactions, it's for DeFi. Solana is there for trading, right? People use Jupiter, they use Radium, all these things. Transaction fees are cheap, it's fast. You can do, you can replace Visa essentially with Solana, with the new Solana phone and all that stuff. So it's two different beasts. So they're both alpha, but people keep putting them in the same field as an L1. Bitcoin is L1, right? But this is what I'm trying to get to. Like, I look for alpha
platforms.
Yeah.
And so, but still say functionally, this is now. In terms of what that alpha is, in terms of what that means, is it could mean that when Solana finds its fundamental valuation, whereby the amount of money generated on the net, through processing transactions, and the amount of the burn, and the amount of people that are holding, all sort of evens out. Maybe Solana is at $100 or $50 when that happens. That could be it. What is going to fundamentally, permanently elevate Solana beyond that? It's the ability to lock away value. So obviously by staking it, but similarly by having it as collateral for the executions and payment of loans. And that's what it needs to do. And if you can have a position where it can steal that market from Ethereum, then Solana's going to fly. But as it stands right now, it's still there is still a bull case to be made for Ethereum, and I think particularly on the back of the ETF news, for now that we have a Bitcoin ETF, Ethereum is almost certainly second. Has the price have they started seeding it yet? I would probably doubt so. Maybe now is when they start doing. I did see today actually that one of the a few new Congress members had declared crypto purchases. One of them being like $65,000 worth of Ethereum, that kind of thing. So he wasn't buying Bitcoin on the day of the ETF launch; he was buying ETH.
Yeah. Well, at the end of the day, what I was trying to say with the whole thing is Solana and ETH are both smart contract platforms, but they're not in the same field because they're catering to different audiences. That's kind of where I'm
fair. No, and it's a fair point. However, there's still overlapping audiences within those differing audiences.
For sure. Okay, now something is happening. Hold on, because you asked me to put the chart back on, and there we go. Yeah, boo! It's doing the candle the wrong way. What's up with that?
Turn the chart upside down.
This is we can do that. It looks much nicer. Yay!
Bull market.
Let's not mess with that too much. Yeah, well, oh no, Bitcoin has a massive dump. It's I keep telling newer people as well. Since we were talking about this earlier, what tips we have for people that are new in this and that want to start trading. One of the biggest tips we have for anyone is zoom out. If you're sitting on the 1 minute scale trying to trade when you're learning, I mean, good luck, but please zoom out.
This very clearly looks like a really, really great time to buy. I mean, look at that dip. It's dropped. It's dropped massively. It's rounded off. It's now making higher highs. It's dipping. Great, buy the dip. Okay, do you want to zoom out now to like the hourly?
I could just go to the 15 and that 15, would be enough.
And it's like, okay. Actually,
barely visible.
Yeah. And actually, when you look at it, it's just slap bang in the middle of this range. So is this a screaming buy opportunity? Well, depends on your time preference, but quite regularly, we've had 1, 2, 3, 4, 5, 6, 7 chunks of time where you could have bought below this price in dips. And within those, there've been multiple drops lower. So, the market is currently providing opportunities and don't panic. Panic when it goes up or panic when it goes down. If you buy in for 4 years, don't care about it going down. If you're buying with the intention of, even if you're riding, if you're riding news, whatever you're getting into it for, like if you have a long-term thesis, then you will not lose, because if you can continually add and lower down your cost basis, then unless you make a really, really bad buy, and I would never advocate blindly DCAing into altcoins. I never have DCA'd into altcoins. I buy them, I ride them. At the moment, I'm not even trading any altcoins manually. I'm only trading them on the bot. So I don't particularly have faith in even Solana, because it's possible for something else to come along which completely eats up Solana. Solana has a certain level of it's got the potential to really become the first mainstream blockchain, and if it can do that, then maybe it can sustain that position. That's obviously the goal. But what we thought was that, wasn't ETH supposed to have 1 million transactions per second by the end of the decade and nothing would replace it? Well, if ETH can figure out their multitude of issues, and they are a big chunk of issues, then maybe they'll hit what Solana's capable of by the end of the decade. Now, if Solana hasn't got the user base to need that demand, but Ethereum has, well, then Ethereum still will remain the dominant chain if it can suddenly do what Solana can do. But as Solana can do it today, ETH is in a serious race against time. And the pace that they're going, and the fact that they still have been dicking around with tokenomics time after time after time, EIP 1559 was great. It really wasn't a priority over getting the speed and fees down. It doesn't. ETH being deflationary doesn't really benefit everyday users. It benefits holders, and if you're benefiting holders over the user experience, then that's not where we really want the leaders of the crypto space to be. We don't want them acting in their own best interest.
No.
And so so this was going down, huh?
Now it is going down.
Ooh.
I wonder how far it goes. It's honestly just super quick 1 minute TA, which is pointless. But if you're currently scalping this, dang it. Here we can possibly double bottom. We can possibly try this range again.
Put the swing trade strategy on.
Yeah, I will. Or you could, whenever we release this, you can start using our tool that tells you stuff, such as I'm just gonna put this to 1. No, 14. So this would tell you when it's time to buy, and apparently it's saying this is a buy opportunity on the 1 minute. Yay. Possibly. But again, this is all just noise at this point.
This is giving so many signals because it's on the 1 minute. So if you zoom out to say the 5 or 15,
here's
then
the 15.
It suddenly looks a lot nicer. And I have been using this to pick out periods to buy. And my give it, because I've basically been doing buys and sells. So I've built my position towards the low end of this range, and then as we've got to the top end of the position, I've taken profits. So now my average is around where your line is at, about 44,000. So it's just around that wick where the green candle came.
Yeah.
So now that I have a bit of basically leeway where I can afford to sort of absorb a bit of a loss before I get back to where I am. But what we're seeing overall is we've got a double bottom, we've got higher highs, we've got higher lows. Overall, this is pointing upwards, and we've just had the most bullish news in pretty much our history.
Bitcoin's history, yeah.
Yeah. Now, so is it gonna dump? I mean, yeah, it's possible. I just don't see it. I just can't really see us. I see volatility, I see sideways, and I see us just sort of pushing sideways and up, because I can't see right now people willing to offload thousands of Bitcoin to drop us 20-30%. I mean, just don't see it.
If we just look at what the daily is saying right now, look. So we have, with our strategy here, it's told us to buy the, oh crap, I keep forgetting that it does that. I keep forgetting. So it's given us a bunch of buys here. That trade would have been, I think, like 100 something percent. Let's just, or not, sorry, 150 something percent, somewhere around there. Yeah, okay, cool. We would get something like that here as well, 50%. What I'm trying to say is, right now, we've already had these sell orders because, first of all, the RSI is so topped out, but right now the RSI has come down a lot, but we're still going up. So all of this is just a big bullish divergence, really. Or, sorry,
bearish divergence.
Bearish divergence, yeah.
But we have room to move back up and make a lower high on the RSI and another higher high on the price. So, yeah.
We do have room to kind of peak again over 70, get a big pump up somewhere, and then maybe we correct down, or we just continue this, this, let's just generally point it downwards like that type thing, where the price just does whatever it did here, for example.
Well, we can't go much lower than 50 without a price correction. So yeah, we'd have to drop in order to keep going down below 50 on the RSI.
Yeah, and we've already bounced on the 50 on the RSI down here. So, but generally speaking, like if we really look in longer term, oh gosh, sometimes I hate trading you or my memory. But maybe this is really cluttered now, but I don't really care. We're looking at this peak right here. We have a fib level right here, exactly where we basically peaked at 49. And this has been our range since this happened, essentially. When this happened on this downtrend, we were like, okay, whenever it rebounds, this is going to be a big level for it to crack through. And so far, that's proven to be sort of where we're at.
Yeah, we've only had one hit of it yet. I'm expecting multiple hits at this, and so I think we will just sort of range here for the sideways. I'd be very surprised if we sort of knock down to 40 or below. We've got a very, very clear bottom there, and then if it drops below 40, then it's going down lower, and we're all mugs and bull market over, and Bitcoin's going to zero. And
kind of what people were saying here and here and here.
Peter Schiff will be right again soon. Don't worry.
Yeah, he will be right for a while again.
For a while.
But yeah, I don't know about you, but I kind of got to go to bed soon. I have work at 5 in the morning. No, bummer, right?
I've got work. But
Yeah.
Phil told me that he was going to wake up a trillionaire, so I'm pretty disappointed that he lied to me, to be
Yeah.
honest.
Yeah,
Because,
sometimes when you really, really want something and you decide that you want to change your life and you think about it really hard and you just decide that that's what you're going to do, your fantasy becomes reality eventually. And when I went to bed last night, I was like, when I wake up tomorrow, I'm going to be a trillionaire. My long is going to be 200 million% in profit. And then I woke up and it wasn't, and I was like, oh, dang it.
you should have tried hard enough.
Yeah, I should have tried more. I should have thought about it a little bit more before I went to bed. Sorry, guys. It's my fault.
You need Jesus.
Okay. Well, with that shocking statement, I think we should round this off here. We're happy to be back. It's been fun. Hopefully, next was it Monday? We're doing TA Monday. Tuesday we're doing Macro Tuesday, and during next week, hopefully we'll be able to kick out a few how-to videos, and yeah, we'll see how that goes. But and yeah, no, I'm not going to announce anything yet. We'll talk about it later. But essentially, we got stuff going on. We'll see how long that takes.
Oh, too long as always. But no,
yeah,
share this with everyone, because
yeah,
I'd like to think we've spoken about some fun things tonight. And if anybody has 2 hours of their life then and wants to understand where Bitcoin's at in the big picture, then I'd hope that we've kind of given a reasonable assessment about what should be expected in the future. And yeah, it'd be really nice to get like a million or 2 views on this video. So
yeah, so
share it with everyone you know, and if they share it with 3 people and they share it with 3 people, then easy. And then everybody learns something and we win.
Yeah, and everyone's happy. But with that said, make sure you guys like, share, subscribe, all that stuff. Put the notification bell on and join the Discord, because again, I say this every time, but if you're new here and you haven't seen us before, join the Discord, come talk to us. We're there the whole time. There's a lot of people in there that want to talk, that want to hang out, that want to learn, that want to help educate. You can get a lot of tips and tricks from a lot of people in there, so join that, and we'll see you there. We're actually jumping into that now, directly after ending this, and I'm thinking I'm gonna give this a go now, and I'm gonna end our video with our intro video, and hopefully when I click end stream and click OK, it actually ends it before that video ends, but not too early. So we'll see. If you see us sitting here like this, that's because I messed up, but I'll give it a go. Okay, so we'll see you next time, everybody. Cheers.
Bye.